So this first panel we've got is Innovation Drive, Navigating the Investment Landscape in Africa's Technology Frontier. Very well-known moderator for this one. I'm sure he needs no introduction, but I'll do my job anyway, otherwise I won't be asked back next year. So we've got Danladi Verhagen from Verod Capital Management. He is, of course, the managing partner there, managing director. He co-founded Verod in 2008 and has since led the company from strength to strength, successfully raising 3 private equity funds and a venture capital fund through Verod Keppel Africa Ventures. Currently the managing partner of the firm, he also serves as a director on a number of Verod portfolio companies. Prior to that, he worked at Citibank Nigeria, Ocean and Oil Holdings, and McKinsey. In May this year, in case there's something you don't know about him already, he was appointed the board chair of AFCA, the African Private Capital Association, which is fantastic, and recognises Danladi's long-standing contribution to private equity on the continent. So please join me in welcoming to the stage Mr. Danladi Verhagen, and if the panellists could also join him. Thank you.
Thank you, Sarah, for the very kind introduction. I did not deserve that. Thank you so much, though. So, ladies and gentlemen, welcome. Hope you don't have that post-lunch hangover, but hopefully we'll try and keep this session exciting and keep it moving quickly. So the title today is FinTech and Innovation Panel, Navigating the Investment Landscape in Africa's Final Technology Frontier. I think it's fair to say that innovation is the buzzword today. But innovation in Africa is really complicated for so many reasons that we all know about, right? But Africa, more than any other continent, just requires innovation to basically move its masses out of poverty and into more of a more productive lifestyles. Over the last continent, technology has really helped to catalyze growth across the continent. But a few years ago, most tech investments followed sort of B2C type opportunities. More consumer-facing fintechs, mobility platforms, e-commerce, all big, exciting ideas that really aim to reach millions of African consumers. But at the same time, more recently, there's been a quiet change, it seems, and with investment going to sort of more durable businesses focused on the B2B opportunities, right? These are innovators that don't necessarily grab headlines, but they're really financing businesses that are tackling Africa's biggest problems, basically reducing frictions for existing businesses. So today, one of the things we're going to explore is this trade-off between investing in sort of B2C opportunities versus B2B opportunities. We'll also take a look at new financing models and just see if directions that new financing models are going in. So to join us today and unpack these various topics are 5 business leaders, all experts in the field. Apologies for not having much gender balance, or any. We'll do better next time. Please, I'll allow my fellow panelists to introduce themselves very briefly. And may I also ask each one of you to just, when you're done, just say what's the one most exciting innovation or trend that you've seen to date in Africa?
Shall I kick off?
Yes, please.
Yeah.
Sorry.
Good afternoon, everybody. I'm Nick Allen. I'm the managing partner of Savant. Savant is a early-stage hardware and deep tech invest and support organization working with scientists and engineers and innovators taking their tech to market both locally and internationally. I think to your point, solving the challenges, the real physical challenges that we have on the continent that I think are relevant across the world. The big opportunity, the big need that I see over the next 5 to 10 years. I did ponder that for a while, but I think that if I were to name one, I think energy is probably an area that will have an impact across a number of other really, really important impact areas. So for me, it's going to be energy and all sorts of the application of energy, the production of it, etc.
Thank you.
I'm Ketso Gordon from the SA SME Fund. We are a fund of funds focused mainly on South Africa, doing mainly venture capital from seed to Series B through about 15 funds that we partner with. Because I'm a fund of funds guy, I think the most important thing for us to get right in the coming period is to get institutional capital into venture capital. It's been a tough battle in South Africa even, where we have deep capital markets to get institutional money. And in the rest of the continent, I think the challenge is a combination of getting institutional money, but also raising funds in local currency. We've seen, some of the downside of having dollar-based and hard currency-based funds.
Hi, my name is Ron Margalit. I've been investing on the continent for almost 20 years. I serve multiple capacities in different investment firms and funds, but if I'll speak on their behalf, I'm restricted of saying outrageous claims, so I'll speak on behalf of my angel investment company, which is Monomics. In terms of one innovation, I actually have to say two, because one is probably AI. I think that's the given. I think the implication for AI on the continent is not just democratizing talent and product development. For many years, the narratives was African solutions, by African on the continent. I think now we can start thinking about African solutions by African to the globe with AI, but AI is a given. So I think a more non-obvious one that I'm extremely bullish about is everything related to remote sensoring. I think one of the main challenges on the continent has always been gaps of data and understanding what's going on the household level. And with the emergence of sensoring, whether there are applications for smallholders farmers in high-yield crops or satellite images for early warning systems, I think for the next 5 to 10 years, we'll start seeing more and more concrete data that we can actually take both investment and operational decision based upon.
Thank you.
Good afternoon. I'm Oid Hassouna. I'm founder and CEO of Value. Value is currently a listed company in the Egyptian Stock Exchange. We are in buy now, pay later / consumer finance. So we disrupted the market in Egypt in 2017 by providing instant approvals for customers for debt, whether this debt is for buying a product or a service, or even now we can provide cash loans, and also we can provide loans for cars and home improvement. I think one very important innovation that I didn't see yet in Africa, and it's going to be very important, is banking as a service. Although it's not new to the world, but it's not here still in Africa. And I think people are always interested in buying financial products, not from the banks, not from the financial companies, but they want to buy it in their normal day life. We've seen a lot of examples of big supermarket chains working with banks as a service, and this is thing that I believe, especially with Africa mostly deregulated, this could be the new thing happening to Africa. If we are able to have banking as a service, it will make a lot of changes to the market the way we're used to.
Thank you, Ibrahim.
Hi, Ibrahim Ramadan. I'm a partner at Sawari Ventures, a Pan-African VC fund based out of Cairo. We have offices in Casablanca, Dakar, and soon Nairobi. We say that we are generalists. We invest in everything that is tech and tech enabled, but we have kind of preference to two industries, deep techs, along with our dear friends, as well as fintechs. For me, the trend that we will be witnessing in the upcoming period, I can say two elements actually. One of them is the rise of the Pan-African champions, because we're starting to see this more and more often, especially on the fintech side, given, of course, they had the largest funding. And the other part is putting Africa on the deep tech map globally. Yes, it's concentrated in North Africa and in South Africa, but we are seeing more and more activity when it comes to global companies acquiring local teams that no one would have guessed that would be able to provide a product out of the African continent on that level.
Yeah.
Thank you. There's quite a diversity of thoughts and perspectives, all great. We'll pick up on hopefully a couple of them as we go along today. Maybe we just start with Ketso. I mean, you manage the largest institutional VC fund in South Africa, at least, and probably the continent. You also mentioned your views on trying to get more institutions into the VC space. How are you seeing innovation change that? Are there
I think it's
what
been,
recommendations do you have as well going forward?
yeah, I think it's been interesting, and I think the fintech investments have sort of led the way on the continent, and it's created a fair amount of FOMO. And investors always want to be part of the next new thing, and so there's been quite a lot of activity in that space. But as that space has become a bit overcrowded, what we've seen, I would say, an equal amount of energy, but earlier stage, going into ed tech, health tech, ag tech, and climate tech. So it's clearly, there is a vision that investors are willing to back. So we are definitely seeing a lot more investment from LPs that we would not have, expected to invest in the last 5 years coming to the party. And I think the one thing that we've done in South Africa, which has attracted a lot of attention, and Anita's here, and she gets most of the credit for it, is we set up a thing called the University Technology Fund, and that's commercializing the IP coming out of the South African universities. And when we look across the continent, there's a lot of really cool stuff, but there are leading examples, whether you're looking at Stanford or Cambridge or wherever else. So the investors are aware that that's where some of the brightest minds are coming up with long-lasting solutions for incredible problems that we face on the continent. So there's quite a bit of excitement around that. So I would say it's generally positive. We're seeing a lot more activity.
Okay. And just to follow up on that, are you talking more about international investors there, or also domestic investors? Because you mentioned that in your opening statement.
So South Africa is different from the rest of the continent. There might be a couple that are similar, but 70 to 75% of the money invested in VC in South Africa is local currency money from local institutions. Only about 25% is offshore. So we are a South Africa-focused fund of funds, so we talk mainly to South African investors.
Thank you. Maybe we'll go to Ron next. Ron, you've got probably more of a global view on this because you invest in different markets, including Africa. How do you think international investors will think about investing in Africa versus other emerging markets? What is actually attracting them to Africa to invest in the innovation space?
So that's a great question. First of all, in the context of innovation, I think the continent always posed somewhat of a contradicting story. On one hand, you have these challenges that on the surface are applicable across markets in Africa. Let's take access to energy. So you have 600 million people who don't have access to electricity, and you say, okay, if I have a solution that works, then scale can be achieved, and that's a story that attracts the attention of early stage investors. But then you realize, or you hit the reality, that if you build a company in Nigeria, scaling it to Kenya is not as easy compared to if you're building something out of Silicon Valley and you want to go expand definitely in the US, but even to the EU. So I think that story has now been fully recognized as you look at maybe other markets that are maybe a bit more integrated, Southeast Asia or Latin America. And in the context of fintech, I think that may be the only sector that has been somewhat proven successful in achieving that sort of narrative. And that's why you see, on one hand, on the supply side, a lot of companies emerging, but on the demand side, appetite from international investors. So I think that's the main difference between the continent to maybe other countries or markets.
Okay, thank you. I'll just pick up on that theme of scaling, because Ibrahim also spoke about that in your opening statement. You spoke about creating African champions. Ron has just mentioned primarily seeing that only in the fintech space. Have you seen that in other spaces, Ibrahim? And then B, as these regional champions are being created, what's sort of been the biggest challenges? You could summarize in maybe just 1 or 2 points, the biggest challenges that these founders have faced.
Look, to be fair, I haven't seen any non-fintech on track to become a proper Pan-African champion. And to be also very clear, I'm not sure whether this happens to be because a function of their size or whether it's a function of other variables, right? So I can only think of one deep tech that started off in Egypt. Now they have branches in Morocco and opening up actually one in South Africa by the end of the year. But still, it will not be of the same magnitude of the fintechs that are looking to expand across the African continent. Right? And fintechs, in that case, actually have a bigger hurdle than any other sector, because for each of the 54 countries, they will need to have a different set of regulations and regulators to appease different dynamics. But it's the only thing that seems to be working.
If I may add to that, I completely agree. But the interesting parts, especially on the continent, is at the end of the day, mostly every consumer-facing solution, you wrap around fintech, right? So are you counting M-Kopa as a fintech, or they started as an off-grid electricity company, now they do mostly mobile? What is it exactly, right? It's consumer financing. And to me, the fintech play is the trench or is the building block without which you cannot achieve scale. That's why I agree with you. But there are some sub-classifications of these more scalable companies, definitely not deep tech, that could be then called other than fintech per se.
Look, when it comes to things other than fintechs, all the examples that come to mind, they didn't just become Pan-African champions.
Yeah.
One of our companies exists on essentially every single smartphone in existence, right? But that's not a Pan-African champion, that's a global champion.
Yeah.
Right? And that's the beauty of the kind of industries that you'll be able to do. And of course, we can go back to the whole B2B versus B2C conflicting. But I am yet to see a Pan-African champion that is not fintechs across, and the fintech-enabled companies, of course.
Sure.
I think there's too much alignment here. It's not as much fun. So we'll go to Nick.
Yeah.
Because Nick, you invest in deep tech, right? Hardware. I'm understanding that you can't scale your businesses because it's not fintech. So please, I'd love to hear your views on that.
I think the point is it's hard to scale those businesses within the African context because the needs aren't similar enough in other markets. And I think what we're looking to do with the companies that we invest in is ensure they have that competitive advantage that's not just local but international. And once you've cracked the local market, your goal is to go to the biggest market that you can, comfortably address. And that's often not in Africa, we find, in the companies that we're working with. So if we look at the companies that we've invested in that are doing well outside of the South African context, they have predominantly gone into Europe, China, Japan, the US, obviously, because those are the biggest opportunities. Often, I think the point might come up later, but B2B is really where we are focusing. I think as those needs become more relevant in African markets, so we're looking at water opportunities. I had a grapple between energy and water, but I think water is going to become a real need and opportunity, and that's going to be relevant, more across the continent as we stand now than elsewhere. So I would expect that we're going to be building water tech companies that are solving problems that are going to be more relevant up in Africa. So we would need to understand how we make sure that those work across the African continent rather than into other international markets. So we will get there, and we will need to make sure that works. But scaling our South African deep tech businesses has really been about finding those international partners that are going to help us take it into bigger markets.
Okay, thanks. And have you found that scaling or growing your businesses takes longer time or perhaps more capital because of the space that you're in?
Yeah, I think it's all relative. It takes longer to get the businesses that we typically invest in to the point where there's product market fit, but also you have a market that really understands the opportunity. Because we often work with businesses that are building solutions that may be a little bit early, so educating the market. One of our companies, Sensor Networks, has been around for 7 years and has fundamentally had a very, very solid product. But it's only been in the last year or so that that realization has, come to pass, that this is a great product, a real need, real opportunity, and they've seen significant progress since that. And again, with the help of a strong corporate partner, they've been able to really drive their scaling opportunity. So yeah, it does take longer, and it has the potential to require more investment, but it's, what kind of investment are you talking about? Yeah. Most businesses require significant capital as they scale, whether they're deep tech or not. But there's been lots of realization that you can take deep tech businesses to the market with, the right application of capital. So a combination of debt and equity, for example.
No, thanks, Nick. Maybe I'll go catch just a follow-up to that is, in today's investing environment, LPs speak about DPI all the time, right? Want the money back. You're a big investor in Nick's firm.
I haven't given him any money yet.
I was about to say unfortunately.
Yes.
Yeah,
it's coming. 10x is coming shortly. And you also spoke of trying to attract more institutional investments into the VC space. How do you balance that, right? If you're in sort of longer life cycle type opportunities that may still be extremely profitable over the long term, but investors wanting capital back sooner.
I think the challenge is across the continent at the moment that VC funds and the asset class is still relatively new. There are some places where it's a little bit older. And we've got maybe 3 funds in South Africa that have an exit track record to speak of. But not enough of an exit story overall. And in fact, in a meeting we had with our 15 funds a month ago, we've agreed to work collectively because people are always very secretive with their exit data. But we've decided to cooperate so that we can put together a narrative about what's happened in South Africa over a sort of 10-year period. And then it doesn't look so bad because we've had some successful exits over the years. Not listings, we don't have those in South Africa. They're all corporate exits, either to South Africans or foreign corporates. But we've got enough of a story that can be put together and told more clearly. But I suspect that we've got somebody here who's been in the business for a very long time, but no successful big exits yet. But they've got great stories on valuations. And somehow we've got to be able to tell that story and then slowly build up the exit story. Without that, I can tell you now, it's going to be really difficult to raise new money. And growing the ecosystem is one way of maybe getting more interest from investors and LPs, because more funds means a much more diversified set of investee companies, and then you've got a few popping out that are fantastic stories. We've got one from the University of Stellenbosch called CubeSpace. You would not think that in South Africa we can produce a space tech business that's competitive globally, but it is. And we've got a second one now that produces the cameras that goes onto satellites. So suddenly people are noticing this thing, and then they were like, okay, we'd like to be part of this. But they're looking at the valuation, not the exit. So I think valuations are going to help, and exits are going to help even more.
Yep.
Fantastic, a patient LP.
Yeah, we have to be.
Love that. Let's go to talk about B2B versus B2C opportunities, and we'll just start with Walid. You've built an amazing business centered around the consumer. Consumer is king. How do you think about any B2B type models, any enterprise models within?
So we're currently really looking at B2B. We think it's extremely important as another part of our business. We have submitted to acquire a license for digital SME lending. In Egypt, a couple of years ago, the Financial Regulatory Authority decided they are going to provide what they call a FINTECH license for the first time. And this was actually something very good because they made the capital required very low compared to a normal company, but they want to make sure that there is a digital angle for that. We work in Egypt with more than 9,000 different merchants, and we've been working for them now for around 7 to 8 years. We have a lot of data on those merchants. We have a lot of reviews on them. Most of them are SME play, small and medium enterprise, and they definitely have hardship accessing debt from the banks because still the banks want to look at official documentation. There is no alternative lending methodology in that space. We have the experience, we control the cash flow, and accordingly we started a pilot in Egypt a year ago by trying to finance all our merchants, our SMEs, and it's working very well because we have a control on the cash flow, we understand the data, we have access to their sales on different platforms, whether this is Shopify or Amazon or other players, and the B2B now is representing like 5% of our business. Once we get licensed, and I think this is going to happen hopefully this year, once we have the license, we'll be able to provide this at scale. We have already arranged for a lot of funding. We have a very deep debt capital market in Egypt, which is one of the most important and differentiator than other African countries, that we have very deep debt capital market. You can issue bonds, you can issue commercial paper, we have securitization, and we have also sukuk. And this is what really investors of this type would like to see. So we've already arranged for a bond for this purpose, and hopefully if we complete the B2B cycle, we'll be able to provide mostly embedded finance for those merchants on the back of sales that we do with them and on the data that we receive from our customers and the reviews and the performance of those merchants.
Okay, thank you. And just curious, so over the next 5 years, where do you think revenues from B2B versus B2C will come? You say today it's 5%. What are you projecting?
I think, so B2C growth is very scalable. We have 1 million customers right now. We have 9,000 merchants. So there is a lot of difference between both. But I think in the next 5 years, definitely we will be looking at revenues at 35% coming from the SME business and 65% coming from the consumer. The best part about the consumer that we provide revolving credit limits. So basically there is growth that comes with momentum. While on SMEs, those are going to be all like short-term overdrafts. They have to be closed and reopen again. Not the same as our other businesses, but most of our profits would be coming from the SME business, not from the consumer lending, because the competition on consumer is very hard, and we compete already with 34 banks and 49 companies, but definitely the SME space, the players are very minimal and the banks are very conservative when it comes to lending them.
Interesting, thank you.
I'm sorry, I just have to say something. So the banks that he competes with, the bank employees use Valley before they use their own banks where they're employed. Just saying.
Interesting. And you know, while you have the mic, Ibrahim, what do you see in your own portfolio about B2B versus B2C type opportunities?
So again, deep techs by default, B2B, right? And I don't like to see as one better than the other because each comes with its own positives and negatives, right? You have B2B, you have long sales cycle, you might have concentration risks. B2C, you are faced with the more competition, the customer acquisition cost. It all goes back to having a great product, right? We see that B2B companies, for them to be doing something of substance, to become potential fund returners, they have to have a global angle. They tend to be more successful than those who are trying to cater for a single country. And for example, we have seen companies trying to do the banking as a service. They're just focusing on Egypt to begin with. Yeah, you get all the negatives of the B2B without the positives of the B2B. So the B2B, for it to work, the trend that we are witnessing are the ones that have a global angle essentially from year one. They just test something very quick on the local market, but they go to expand abroad very fast. B2C, this is not a necessity, but if you ever want to hit the unicorn status that everyone is obsessed about, you better have a multi-country strategy.
Okay, thanks. Maybe I'll go on to Ron. Ron, again, just from a global perspective, how are investors thinking about this? Do they buy into this B2B story now, thinking that's sort of where things are pivoting towards, or are they still chasing the consumer unicorn?
I don't know if anyone is chasing the consumer unicorn at this point. Goes back to the exit challenges that we mentioned before. I have to say, my experience investing on the continent has always been B2C. That's what I feel comfortable investing in, and it's been challenging. It's not easy. It goes back to the narrative that I've talked before, the scale that you think you're going to achieve with the innovation and hardly ever materialize. More and more in recent years, I think there is going to be an opportunity in B2B, but I think it's going to be an opportunity that at the moment, at least I'm not aware of, and again, with the caveat that I'm not extremely familiar with, if you look at B2B successful companies elsewhere of the continent, they solve real challenges to large corporations, right? So who are you selling to on the continent that would pay and will allow you to achieve, high ARRs? Are the banks buying anything, any new technologies and innovations? Are the telcos doing that? What exactly is the corporate level that if you are an entrepreneur and you want to solve their pain point, who are those targeted customers? And I think specifically in the context of the continent, many of these corporations are actually state-owned enterprises. So now you need to start selling to the government as well. So I think there is an opportunity there, maybe easier than the B2C angle, but still it's not as easy as if you look at other markets compared to.
Maybe I'll just go to Nick, because Nick, you probably have examples of customers or enterprises that your portfolio companies are serving. Could you maybe speak about one or two?
Well, to Brim's point, B2B, hardware and deep tech is usually a B2B play.
Yeah.
We have seen one or two that have looked to go to the B2C route.
Oh, sorry, I was asking about B2B.
Yeah, and understand, but
okay.
just quick, B2C
Okay.
is really, that distribution of B2C is really, really hard for the kind of things that we work on. B2B, if you're solving a problem that fits into the wheelhouse of a big corporate out there, again, to the point made earlier, the sales cycles are extremely long, but you then have a partner on board that is going to be able to take you broader than you can do on your own, particularly with the level of funding available, in this kind of ecosystem. And then you're also setting yourself up for a potential exit, which is where we're going. And one of the things that we do with our companies at a very early stage is helping them identify those partners that they're going to be targeting to partner with, that are going to be that exit opportunity for them later. So that's really important to us. And it really is about building those relationships as early as possible in your journey. It's while you're still in those sort of pre-seed, seed stages, you've really got to be identifying those bigger partners that are going to be your ultimate exits.
Okay, thank you. That's great. Maybe we'll just take a tack and move on to sort of like financing models. I think we've beaten the B2B, B2C topic to death. And maybe I'll just start with Walid. Walid, maybe you can talk about sort of innovating financing structures. And we've seen BNPL, we've seen embedded financing. What's going to come next?
I think there must be a potential for democratizing financing. So there must be access to people to lend money directly to corporates or financing companies. Crowdfunding is one of the most important things. Everyone in Egypt has bad history with things that looked like crowdfunding in 1980s and 1990s. But I think this is the most important part. There is a great big competition, and actually the main borrower in Egypt is the government. So what the central bank tries to do, they tries to please the banks as much as they can, because they want to have very limited competition so that they are able to lend the government at competitive rates. So every time we try to push for crowdfunding, debt crowdfunding, I'm not talking about equity here, debt crowdfunding, you find a lot of pushback. They ask you to go to sandboxes that ends up to be black boxes. So you just get into the sandbox and never able to go out. You don't see anything inside. But I believe I would love to have access to customers directly, customers we work with, that they become part of our financing. We have done this on the equity side. So we listed in Egypt. This year, We have more than 30,000 investors. Like 90% of them are retail investors. A lot of people that are common between using value as a service or as a product or even borrowing from value and investing in the same company. So I think crowdfunding for debt is the most important thing. We are trying to get through this, whether through central bank or financial regulatory authority. And I think it's going to be a major change. It will reduce the cost of financing a lot. And it will maximize return for the investors, because those investors, when they go to the bank will do a margin of 10, 12% on their funding. We are happy to do, and then we go and borrow from the bank at another 2, 3% extra. So if we have direct access to those guys, we provide them with a very nice return without the need of all this markup that's happening right now. So we're pushing for that. I think it's going to happen. Egypt currently has around $5 to $6 billion of financing to consumers, whether for activity under microfinance or for consumption under consumer finance, that is not done by the banks. And the banks will always have limit in how much money they are going to invest with you. Also, debt capital market, despite it's very deep in Egypt, but most of them are banks, again, who are buying those debt capital market instruments because they are tax exempt. So if we get access to 30, 40 million people in Egypt, where we can provide crowdfunding and can get them to understand the risk of this opportunity and the kind of return, people would definitely migrate a little bit, not much, but a little bit towards those kind of financing, and accordingly will be able to secure funding at a reasonable rate, provide financing at even a more reasonable rate.
Thanks, quite interesting. And roughly, how far away do you think that is, your conversations with regulators?
So there are 2 sandboxes right now. One of them is completely black. I will not say. The other one is new, so we're trying to get out of the. I think it's going to happen anyway. It will take some time, Ibrahim, because he's Egyptian and he knows what we're suffering from. But again, it always comes through pushing. So consumer finance was not in Egypt before 2017, before value, the way we do it. And I think in the next 24 months, there will be crowdfunding and crowdfunding for that. It might start with equity, which is a fair play, but that is going to come in the next 24 months.
The equity started already. Last week, they got out. Farid signed.
Signed, okay. But we need to see.
We'll see, but
yes,
we'll see
but
practice.
if equity is out, then I think 24 months is very reasonable to see crowdfunding for that happening in Egypt.
Fantastic, that'd be amazing to see. Maybe just one final question before I open this up to the audience to ask any questions. Okay, quickly, is just Ron, just maybe if you can talk about blended finance and what you're seeing in that space, how is that being used to de-risk startups?
How much time we have? Because I can spend a week on that. No, I'm going to give the headlights. So first of all, blended finance, for those who are not familiar with, is I'm very bullish on this sort of emergent asset class. It solves the investor's pain point where there is misalignment between risk and potential upside. And basically you have a subsidized tranche, let's say at about 10% of the total investment value, that will take losses first and basically can juice up returns. And why would anyone do that? Is because if you have a larger or higher mandate, for example, development or impact, then you would want to crowd in private sector. And studies have shown the leverage of blended finance to private capital can be up to 7, sometimes 8x with just that tranche. So I'm a big believer in that. There are many similarities with the financing model to venture capital in the sense that you deploy relatively small bets on a number of potential solutions in the notion of trying to de-risk it. By definition, 90+% of it will fail, but those who will be successful will achieve, exponential returns, whether it's the impact return or the financial return, which will make up for the losses. Yeah. But I think we kind of lost the way along the years, and if there are any DFIs in the room, I apologize in advance, but you and I, Dinladi, were in a presentation before of a fund that showed their capital stack, and they showed that the DFI took the senior tranche level, and now they're asking for concessional blended finance. Well, who is supposed to take that blended finance concessional if not the DFI? Now the DFIs require blended finance to their own investments, and I think this will hinder potential investments, especially around innovation and early stage, because we need to solve for that, inherent challenges, infrastructure gaps, all the things that makes the continent somewhat less bankable. And if the DFI that has that higher mandate of development are not taking that risk or are not putting their money into that action, then I don't know who else will. So I'm bullish on the asset class, but we need to see how the implementation goes forward.
Thank you. So not only are we trying to invest in innovation, we're also innovating how we finance investing in innovation.
So if I can just take 30 seconds. We had money from US aid when it was still around, which took the first loss tranche in our venture capital fund.
Yeah.
And then in the absence of US aid, we were able to persuade the government to say, if you want to mobilize private sector capital into VC, take the first loss, and they did. So it definitely works, and it's been incredibly useful for us in South Africa.
Not all governments can do that, but
No,
absolutely.
sure.
Yeah, great. Okay, maybe just one question from the audience. Please go.
Thank you guys so much for your thoughts. I work with very early stage, early concept founders building products, and I'm curious just as funders, because you talked a bit about just like some of the capacity that we're product market fit and those kind of things. I think a lot of founders, let me just mention really quickly, I work with early stage founders, early concept, and we're often building product, and I think the skill set that's needed at this time is really how do you get through customer discovery in a way that's thoughtful, and it's a skill set that's needed before you get to institutional investors, before you get to angel investors. It's really maybe at the university level, at that kind of partnership thing. And so I'm curious, as funders, are you guys coming back as partners to invest in that ecosystem that way? Because otherwise, how do founders get the skill set in order to get to the places you guys are talking about?
Yeah, if I can climb in there, the early stage is really where we've come from. Savant has for the last 20 odd years been an early stage support organization helping those innovators at the very early stages get to the point where they are investable. So that's a really important component that I think needs more time, effort, and money to have the right kind of people who have some experience that can support those founders at an early stage. As we build an ecosystem where that happens on a natural way, on a natural basis. If you look at those early stage ecosystems around the world that work, it's because they're people that have, innovators have done it before, have got the experience, and are able to share that experience with the next crop of innovators and entrepreneurs coming up. And until such time as you've actually built that ecosystem and on a sustainable functioning basis, you need to invest in ensuring that you have those mentors, those guides, those very early stage investors that are prepared to take the risks, put the time and effort in to get those businesses to a point where they do kind of start ticking those boxes at the seed and Series A stage. So yeah, it's a real need. That's one of the big areas of support and investment at that early stage. It's a combination of the support plus the investment to get those businesses to that seed stage.
Okay, thank you. Unfortunately, we've run out of time. I just want to say thank you to Nick, Ketso, Ron, Waleed, and Ibrahim. And thank you all to the audience for joining us today. Please enjoy the rest of AFSIC. Thank you.